In this video, I'll be going over Rua Bioscience, the latest IPO on the NZX. Hi guys, welcome back to another video. So as you all know, the newest IPO on the NZX is Rua Biosciences, and to be honest, before the IPO I never actually looked much into the company, but then seeing the IPO did really well, up 40%. Now there might be people wondering whether now's a good time to buy, because I know that the IPO was scaled back as there was a maximum allocated amount of 20 million and there were more than $20 million worth of applications. So if you didn't get your whole amount that you applied for, maybe you might be wondering whether now's a good time to buy, or if you just simply missed out on the IPO, whether you should buy the stock now. So in this video, I'll be going into Rua Biosciences and taking a look under the hood and giving my personal opinion. These are just stuff that I've sourced from news articles and as well as their PDS, okay, so their prospectus. So if you enjoyed this, be sure to hit like and subscribe, and always, it's not financial advice. This is purely for entertainment purposes only. If you need help with financial matters, do seek help from an authorized financial advisor. But I just want to make this clear as well. In this video, I'll be demonetized if I say certain things, okay? So Sienna Biz, I'll call that CBiz. Okay, so we know the code name, so it'll be CBiz for anything, you know, that plant that sort of makes you feel good. Rua Bioscience lists on the NZX main board, share price up 40% within an hour. And I think it closed at 68 cents per share, so it held up on its gains mostly. Rua is a New Zealand pharmaceutical company that is aiming to be a leading producer of CBiz-derived medicines. The company was established in 2017 to support local economic development in Te Tairawiti, East Coast region, and is a pioneer in the New Zealand medicinal CBiz sector. It was the first company in New Zealand to obtain a license to cultivate CBiz for research purposes, and the company's co-founder was actively involved in both the establishment of the key industry associations and the development of the regulatory framework that is now in place to govern the sector. Rua will operate in the research, cultivation, extraction, and manufacturing parts of the CBiz supply chain. So it's good to know that the co-founder was involved in developing the regulatory framework, which means that they'll have a competitive advantage over other CBiz medicinal sort of manufacturers. What's also interesting to note is that Rua is involved in the manufacturing side of the supply chain. They are required to have a GMP certification, which is in place to ensure that products manufactured are consistently safe, effective, and of acceptable quality. They are currently working with MedSafe at the Ministry of Health to secure the GMP certification, which is required to be in place before commencing commercial production. Rua expects to be audited for GMP in Q4 of 2020, and the company expects to be certified for GMP by no later than Q1 2021. So chances are there won't be any commercial production until Q1 2021 and beyond. On a separate note, they don't have any plans for recreational CBiz. The company had no plans on diversifying into recreational CBiz if the referendum passed. They said that that would take a massive change from our shareholder base. The investors that started the company, they're very clear on being medicinal only. I think this might be a strategic statement in the sense that there's still a lot of uncertainty with the referendum. If the company did say that, yeah, we're going into recreational CBiz, then that would create a lot of uncertainty with the share price because the outcome of the referendum is still unknown. And operationally speaking, currently they only are focused on medicinal for the time being. You know, might change going forward, but we don't know that. But from a share price perspective, the public might perceive it as something different. The public might be acting on the referendum results, mainly due to imperfect information, pretty much, that they think that it does impact the business. But at the end of the day, you know, the share price is a lot of factors going into it, and public perception is definitely one of them as well. Moving on to the next part, I looked at their key customers. So Rua has secured a sales agreement with leading German wholesale importer and distributor Nimbus Health. I had a look on their website and there wasn't really much on there. So I looked at the founder and I found his LinkedIn profile. His name's Linus Maximilian Weber. Okay, and he founded Nimbus Health 2 years ago. So it's a very new organization. Everything is new, and that makes sense because you wouldn't expect this whole medicinal business to be quite a mature industry. It is a sunrise industry, so there's still a lot of navigation going on. In terms of the executives on Rua's side, the CEO is Rob Mitchell, and Rob is a highly experienced senior executive with over 30 years in leadership roles for major global pharmaceutical companies, according to the prospectus. And what I found interesting as well is that Rob was CEO of local diagnostic healthcare startup Caldera Health Limited, which entered into a shareholder-initiated voluntary liquidation in October 2019, while Rob was the CEO. Digging deeper into the other material information document in the offer register, I found that Caldera was a business that was involved in developing a test that predicted the presence of prostate cancer based on RNA biomarker signatures. And after finishing clinical trials, they figured that Caldera's diagnostic technology was considered to be better than some of the alternatives, but only marginally. So the key investor essentially withdrew ongoing funding. I don't think he's faced with the same circumstances here, because there is a clear path to revenue with Rua Biosciences. At the moment, it's way too early to tell whether he's been doing good or not, because there's no track record yet, but we'll see in the coming few years. For revenue potential, I've calculated their production capacity. So they have an in-house cultivation facility of 160 kgs per year. And they have a partnership with MedBloom with a potential capacity of up to 870 kgs per annum. The drug price set is about $2.30 per gram. So the total potential revenue is 2.369 million euros or 4.2 million NZDs. In terms of financials, Rua is currently and has from its inception been a pre-revenue loss-making business that is reliant on raising capital to fund its operations. Rua expects that it will continue to be loss-making for at least the next 2 years in order to support its longer-term strategy and generate revenue as quickly as possible. The company intends to make its first material sales through wholesale exports of pharmaceutical grade dried flower into Germany. So here we have the financial information of Rua for 2019 and 2020. We can see that total revenue in FY19 was 222,000 and 728,000 in FY20. And the reason for this revenue was not because they were actually selling product, but rather they received grants from the government. So it consists of grants received, including the Rona wage subsidy and gain on sale of property, plant and equipment. Another interesting thing to note here is that the net cash flow from operating activities is an outflow of 1.952 million in FY19 and 3.628 million in FY20. Expect the cash outflows for FY21 to be much higher, as they did raise a whole bunch of money to spend on R&D, developing the product and marketing as well. The targeted amount that they raised of 20 million is intended to provide Rua with sufficient funds to achieve break-even within the medium term, that is the next 3 to 5 years. That was what was mentioned in the prospectus. Moving on, let's take a look at escrow arrangements. So under an escrow arrangement, there are escrowed shareholders such as the institutional investors, the directors and senior managers who owned shares pre-IPO. They cannot sell their shares until certain criteria are met. Essentially what that is saying is 25% of the shares they can sell after the date on which they release their half-year results, and they can sell their remaining 75% of their shares on the Thursday after the full year results are released. And you can expect that to maybe be around August, mid-August, just taking a guess here. So if you're looking to buy shares in this company, there might be additional supply, which should drive the price down. But by then, we probably won't know where the share price would be, so it's still quite some time away. In terms of the risks that I identified, so firstly, GMP certification is not yet obtained. There's no commercial production cycle yet. They only have one customer, Nimbus, so there's high customer concentration, increasing competition, lots of people trying to get into the CBIZ space, and CBD product prices have been trending down because of that. And they're expected to be loss-making for the next 2 years. And lastly, there is regulatory risk, given that the medical CBIZ space is relatively new in both New Zealand and Germany. So to conclude, Rua is in an industry where it's a sunrise industry and there is a lot of growth ahead of it. How well Rua does really does depend on how well they can execute their strategy. And for me personally, this stock doesn't fit in with my strategy yet because, this stock is something like a startup, whereas I'm more interested in stocks that can pay me a consistent dividend income. At the moment, Rua is a bit too early in that stage, so I'm not going to put my money in. But that being said, if Rua starts making progress and I can see the future potential, then maybe I would buy stock in Rua at that time, but that's not right now, so I'm just taking a wait and see approach. Let me know down below what you guys are doing with Rua stock, what you guys think about it, and I'm always keen to hear other people's opinion because you have heard my opinion. And hope you enjoyed this video, and until next time, take care.